What's going on? My name is Mitch.
And I'm Scott.
And together we are the Mahaffey Group, a team of licensed brokers that service the entire Denver metro area. Numbers are out, and as we're heading into the fall, let's take a look at what the Denver metro market is doing.
And keep in mind, these numbers reflect September. Even though it is October now, we get our numbers a month behind. So keep that in mind as we move forward.
Don't know what's selling until it's already sold. So
That's right.
Let's dive right in. Active listings for the month of September peaked at 8,466. Now, this is overall. This is single family. This is townhouse. This is condo. This is everything. This is just the top-down view of what's going on in the market. So, 8,466 total listings for the month of September in the active category. That's a 56.5% increase from September of 2021.
Wow. And if you remember September of 2021, 56% sounds impressive. Well, it is impressive considering we were at 5,409 last September. So more inventory definitely coming on the market.
The crazy thing to kind of reflect the opposite of that is under contracts for September, we're down 22% from 4,724 in September of 2021 to 3,669 last month. So there's more for sale, but there's less selling.
That's right.
So it seems. Keep in mind, new listings are down overall, sold listings are down overall, and days on market is up 107% to an average of 29 days.
29.
Oh my God.
29. How will we survive?
Oh no, it's gonna take me 29 days to sell a house.
It's still really tight.
Yeah.
At 29 days, don't worry about 29 days. That's literally less than a month to sell a house on average. So as you can see, the demand that is there is still very strong. Nothing to worry about from that perspective.
And we'll dive into a little bit more of that here in just a little bit and talk about what price points are moving and what price points are actually taking a big hit as rates continue to rise, and as some lenders are predicting double digits by end of year, if not early next year. So we'll dive into all of that. So taking into account the numbers that we just talked about, your median sale price for September 2022 is up 8% year over year to $605,000. And we are up 13.1% just year to date to $630,000.
That is amazing.
That's
one of the statistics that I'm actually having problems digesting. You know, we're looking at fewer homes sold. We're looking at higher sales prices. So the homes that are selling seem to be going up. And if you're already a homeowner, if you bought a few months ago, they're still appreciating. So even though demand appears to be down, which
feels like it's down, but the numbers say otherwise. There's more homes for sale, there's less that is selling, but those that are selling are still selling for higher prices. I mean, look at the average for September. $715,000 was the average sale price in the Denver metro area for September 2022. That's up 6.5% from this time last year, which that's insane. Right. I mean, last year we were approaching 700,000 really quickly, and now we've reached it, and we're still going. Year to date, average sale prices are up 11.7%. So if you bought earlier this year or last year, congratulations, you're still making a ton of money on your purchase.
That's right. I think everybody's fear right now is, has the market peaked? Are we about to pop?
Are we in a bubble?
It's hard to say.
Based on the numbers, real estate is still a good buy. It's still a good investment to be making.
Exactly.
Even now, as rates are going up and demand appears to be dropping.
That's right. You're not going to make 11, 13% in your bank account right now. So real estate still proves long term it's the best place to put your money.
All right, so let's talk about what's selling and where. What price points are still seeing movement, and what price points are we seeing fewer properties selling? So, I think we touched on it last month.
A little bit.
With rising rates, your first-time buyers are going to be the most impacted, and your lower-priced properties that those first-time buyers are able to purchase are going to see the biggest hit as people can no longer afford those houses and can afford to get into those mortgages. And the numbers really kind of prove that statement. From $499,000 and under market wide, we're down. Sales are down from 400 to 499. They're down 30.5%. From 300 to 399, they are down 41%, and 200 to 300,000 is down 46%. So that lower price tier is what's taking the biggest hit, and that's where you're feeling and seeing a lot of these big price reductions, a lot of these really long days on market, a lot of more unaffordable mortgage payments for those people that aren't being able to approach the purchase with 25, 30, 35% down because they have a house to sell. This is primarily going to be your first-time home buyers.
Right.
We see a lot of FHA products, a lot of VA products, not as many conventionals on first-time buyers. But the one thing that's true between all the different loan types that people are buying with is for first-time buyers, generally lower down payments, 3.5%, 5%.
3.5, FHA, VA.
So you're going to have your mortgage insurance and some other expenses in the monthly payment that you're going to see that creep up. Now, on the exact opposite end of the market, properties from $500,000 all the way up to $2 million plus are selling like crazy, and there's more sales in the upper price points in Colorado year over year in the higher ends. 500 to 700 is up 5%. 700 to just under $1 million is up 23.5%,
which is amazing. Considering the interest rates that we're seeing go up, the higher price points going up, and again, to me, it just proves that those people are better qualified,
right,
are getting better loans. I mean, there's a lot of options when you have more money down. You have ARMs you can deal with. You have interest rate buy downs, for example. They can still make a payment or make your payment more affordable if you have that ability to buy those rates down right now.
I mean, even the $2 million and up, the ultra luxury properties in Colorado, sales are up 14% year over year. So, now if you are considering buying and you qualify for the 500 and up price range, now's probably strategically one of the better times to buy because you can take advantage of seller concessions, being able to negotiate inspections again, negotiating on appraisal, getting the seller to buy your rate down,
right,
and still be able to keep that monthly payment in there. Plus, a lot of times you'll have more of a down payment from the sale of a property or whatever it may be.
Yeah, and the other point there too is, like we were saying with appreciation, that's the market segment that seems to still be appreciating right now. So if this will play out over the course of the year. Now we are entering kind of the downtrend going into the end of the year where the market's going to slow down naturally. It does this every year. So we'll see if that appreciation holds. As we get later into the year and into early spring next year, that's when we're really going to be able to tell how the market's going to play.
So with that being said, taking a look at a few of the key points here from the data that's been released. If you're on the fence about buying, now may be the best time to jump in. There's more inventory to choose from. There's more houses for sale. Absolutely. There's, especially in some of the lower price points here, there's going to be less competition too. The Denver Metro Association of Realtors released a statement not too long ago that if we don't hit pre-pandemic inventory levels, that they're anticipating upwards of 19 to 20% more appreciation in home values next year.
And that's astounding.
That's a ton. That's insane.
I mean, that shows how different the Denver market is from the rest of the country. Other parts of the country, they're being impacted substantially. We're feeling some of the impact, but
absolutely.
A 20% increase potentially next year.
I mean, look at that takes our $600,000 median sale price to $720,000,
right,
give or take a few $1,000s there. As a home buyer, I would not want to miss out on that potential gain.
Yeah, absolutely. So if you're in the market, you're thinking about being in the market, looking for a property, now's as good as any. For the foreseeable future, I don't see rates coming down yet. Some of the speculation that's out there still is the Fed in November is slated for another 75 basis point raise. So with that in mind, keep some of this data that we put out today with, the projections into next year. Now might be the time.
Yeah, because as high as rates are getting, there's still that much of a shortage in Colorado for property values to still increase, which means money in your pocket as a homeowner.
Absolutely. So if you'd like to talk to us more in depth about these numbers and just look at your options, you can contact us with the number on the screen. With that being said, we hope you have a great week.
We'll see you guys in the next one.